Last week, market breadth turned bullish for the first time in several weeks. But this week, the data tells a slightly different story. Has the rally already started losing momentum, or is this simply a healthy pause? Let's look beneath the index. One of the biggest mistakes investors make is judging the market solely by the NGX All-Share Index. Instead, I prefer to monitor what's happening underneath the surface. This week, several breadth indicators weakened compared to last week, but importantly, they haven't completely broken down. So rather than turning bearish, I would describe this as a market that's taking a breather after strong improvement. Let's compare the last 3 weeks. 2 weeks ago, our breadth signal was neutral. Last week, it improved to bullish as participation expanded across the market. This week, however, the breadth signal slipped back to neutral. That's our first sign that momentum has cooled. The advanced decline differential also dropped sharply, moving from plus 19 last week to minus 24 this week. Additionally, the volume-weighted advanced decline differential decreased by 69%. That tells us more stocks declined than advanced this week. The percentage of stocks trading above their 10-week moving average also fell from 38% to 32%. Meanwhile, the percentage above the 30-week moving average declined from 51% to 43%. That suggests the market's intermediate-term participation has weakened. Net new highs also remained negative for a second consecutive week, moving from -1 to -2. So, leadership is still struggling to expand. Now here's why I'm not turning bearish just yet. Volume thrust has remained bullish for 3 consecutive weeks. In fact, we've gone from strong bullish to bullish. Yes, momentum has faded slightly, but buying pressure continues to outweigh selling pressure. The upside volume ratio of 60% indicates that buying pressure is still intact. Also notice that both the NGX All-Share Index and the NGX 30 remain in stage 2, which means the primary trend is still pointing higher. Putting everything together, I see a market that is still in an uptrend, but one that's beginning to lose some short-term momentum. This isn't a major warning signal yet. Instead, it's a reminder that healthy bull markets don't move in straight lines. I'll be watching closely over the next couple of weeks. If breadth signal returns to bullish and participation starts expanding again, that will confirm the rally is regaining strength. But if breadth continues to deteriorate while the index stays elevated, that would be an early sign that the rally is becoming increasingly narrow. Market breadth isn't about predicting the future. It's about measuring the health of today's market, so we can make better investment decisions tomorrow. If you enjoyed this update, don't forget to subscribe for weekly NGX Market Breadth analysis. Until next week, let the data, not emotions, guide your investing.